Hello students, Assalamu alaikum. Today we are going to solve November 2021 O-level accounts paper 2, structured paper. So here is your paper 7707 paper 22 Pakistan variant. November 2021, 1 hour 45 minutes is your time to complete the paper, and it's enough time to complete the paper. Okay. Now uh, now answer number 1. Aisha is a trader who maintains a full set of accounting records and prepares control accounts at the end of each month. She provides the following information for the month of August 2021. 1st August, sale ledger control account debit balance 9,800. Sale ledger control account credit balance 420. This trade balance might be due to advances from customer or an error. And erroneously, one of the customer has paid us more money than we owe. He's owed to us. That's why we have two opening balances. Now, purchase and control account trade balance. Okay, these are the totals. These totals have been collected from different channels. Now, prepare the sales control account, the purchase control account for August, balance the accounts and bring down the balance on 1st September 2021. Okay. Now, in this case, what we have to do, we have to make control account. The space is given below. Here is the space 2021. Okay. Now, what we have to do, we have to write here first. This is August. August 1st. Okay. August 1st. Balance BD. So what is the balance BD on 1st August? The amount of opening balance in purchase sale ledger control $9,800. 9,800. Okay, here on the August 1st. Okay. Balance brought down because we have now two balances. Opening balance, two opening balances. One for the receivable and one is due to overpayment erroneously made by a customer, or a customer has returned something after settling the account, after full payment. If he has returned something, we are going to record it as a liability. Okay, now data for the month. See, credit sales 88,850. Okay, now whatever the date we are the after first balance reporting balance on 1st August, each and every item will appear and sales the control account with the date, the last day of the month. Okay, getting my point clear? The last day of the month, 31st August. Now see, amount of sales is how much? 88,850. Okay. Then we have trade sales, trade purchases, receipts from customer 82,100. Okay. 31. Okay. This is from customer, bank. The reason will be bank, and the amount is, this is from customer 82,100. 82,100. Okay. Then payment to customer, discount allowed 900. 31. Discount allowed. Allowed is 900. Then we have bad debts or irrecoverable debts, whatever you want to write, no problem. They are not going to deduct marks or your terminal debt. Okay. Bad debts. Bad debts, how much? 300. Okay. Provision for doubtful debts has nothing to do with control accounts. Be careful about that. Cash purchase, cash sales, and provision for doubtful debts are not going to appear in your account. Sale ledger control account. Be careful about that. Okay. Sales returns, yes. Sales returns. How much is the sale returns? 2,400. 2,400 sales returns. Okay. Interest charge to customer or overdue account. So it's going to be reported over here. 31. Interest charges. How much? $90. Okay. Then come to uh, contra account. 21. Contra. How much is contra? Contra is 2,920. 2,920. And the sale ledger control account trade balance brought down on 1st September. So here we are going to write the closing balance again, balance CD. The credit balance will be reported on debit side as balance CD, which is $350. Done. Now what we have to do, we have to calculate the balance CD here. Balance CD. We have to calculate over here. So how we are going to calculate? Okay. How are we going to calculate? C. Okay. Now get the total over here. Okay. So total of this side, 9,800 plus 88,850 plus 90 plus 350. The answer is 99,099. 99,090. 99,090. Okay. Now, if we start deducting all the credit item from 99,090 minus 420 minus 82,100 minus 900 minus 300 minus 2,400 minus 2,920. Oh God, I missed out. 99,090 minus 420 minus 82,100 minus 900 minus 300 minus 2,400 minus 2,920. 10,050 is your receivable balance at the end of the month. This is 10,050. Okay. So what we have to do? We have to put line over here. And here. And yes, obviously, the total is the same. 99,090. Done? Okay. Now what we have to do, we have to write balance brought down on September 1st. So first balance brought down as a receivable is what a receivable is reporting 10,050, and here for advances or any error we will report it over here. Balance BD, that was 350. Here we have made the purchase ledger control account. Done. Sales ledger control. Sorry. Okay, now we have to make purchase ledger control account. Okay, for purchase ledger control account, what we have to do? There are no double balances in purchase ledger control account, so it means we have not we have not given any advance payment, we have not uh, made any erroneous payment. Everything is going well in purchase ledger control account. Okay, so starting balance that is going to be reported in here. August 1st. Okay. August 1st. Achha. Balance brought down. Balance brought down. Yeah. How much? This is 7,700. 7,700. Done. Okay. Now, for credit purchases 55,400. So here we are right. 31 purchases. Purchases how much? This is 55,400. Okay. Now, payments to suppliers 50,600. So August 1st, payments must be made through bank account. If you write cash here, it's not going to affect your marks. Okay, that is cash payment to suppliers 50,600. Now, discount received. It should be 31st. Okay. Now, discount received. Discount received. How much? Discount received is 600. Then, so contra. Contra, the last item. Contra is 2927. This is the only overlapping item in the data which comes in both the control accounts. The data of sales ledger control account has nothing to do with the data of purchase ledger control account except contra. It's the only overlapping item in your control accounts, okay, which appears in both the accounts. Okay, are you getting my point here? Okay. Now we have to calculate balance CD on 31st. Balance CD, how much? So what we do here, we like balance sheet we have. We add all the items on the debit side, 7,700 plus 55,400. Total is 63,000. 100. Not here, not here, not here. 63,100. Okay. So it means here it must be 63,100. Okay, minus 50,600 minus 600 minus 2920. 8,980 balance here. 8,980 balance here. So we will write here totals. Okay. Now again on 1st September, September 1, balance BD. 8,000. Done. This is how control account is to be. Move to the next page. Okay. Name the book of which ICA would use to obtain the following information and prepare sale ledger control account. Returns, book of time entry must be sales return journal. Discount allowed must be loan from cash. Interest charged to customer on overdue account. Interest charged to customers on this is general and contra entry also from general. Prime entry for this general. Okay. Done. Okay. Why is sales ledger control account at a credit balance 420 on 1st August? I told you an overpayment by the customer, advances by the customer, or any the customer has paid us, the customer has returned good to us after settling his account. Getting my point clear? Let's move to the question number 2. Jabir owns an electrical wholesale business. The following balances appear in this book on 30th September 2021. Inventory, purchases, trade payable, revenue, trade receivable, operating expenses. The inventory on 1st October 2020 was 11,000. All sales and purchases were on trade basis. Calculate the gross profit and profit for the year. Okay. What is the formula of gross profit? Calculate the gross profit and profit for the year. So, okay. First, how to calculate gross profit? What we know, what we should have. Gross profit is equal to revenue minus expense. Sorry, cost of sales. So what we have to do? Revenue, we know that revenue is $160,000 minus cost of sales. Cost of sales. How to calculate cost of sales? Opening inventory plus purchases minus closing inventory. What is the amount of closing inventory? 8,000. Okay. So here comes the gross profit. 160,000 minus 11,000 plus 109,000 minus 8,000. That is 112,000. Okay. It means gross profit is how much? 160,000 minus 112,000. 48,000 is the amount of gross profit. Done? Now, how to calculate profit for the year? Profit is equal to gross profit minus operating expenses. Okay. So here in this question, gross profit is 48,000 minus net profit is how much, and operating expenses are how much? 35,200. 35,200. So the answer would be 48,000 minus 35,200. The answer is 12,800. This is the amount of profit. Okay, done. Okay, move to next question. Calculate the gross margin. So margin must be equal to, margin is equal to gross profit divided by, यहाँ पे आएगा मल्टीप्लाई बाय 100 और यहाँ पर आ जाएगा divided by 6. So margin is equal to gross profit 48,000 divided by revenue 160,000 multiply by 100. Answer would be how much? 48,000 divided by 160,000 percentage 30%. Okay. Advise Jabir how he can improve. He could make by increasing selling price or by decreasing cost of sales. Simple. Increasing selling price, decreasing cost price. Okay, he can improve. Now calculate the trade receivable turnover. For calculating trade receivable turnover, we should know how, the formula. Okay, what is the formula? Trade receivable turnover is equal to trade receivable divided by ये हो गया divided by revenue. So trade receivable turnover will be how much? What is the amount of account trade receivable? Trade receivable is how much? 11,600. That is 22,000. Trade receivable. Trade receivable is 22,600 divided by 22,600 multiplied by 365 divided by revenue is how much? 160,000. 160,000. The answer would be how much? 22,600 multiplied by 365 divided by 160,000. 51.5 days. So we can write round of 52 days. Okay, approximately. Jabir wants to increase his credit sales and is considering allowing his credit customer an extra 14 days of his current receivable turnover. Advise whether he should allow his credit customer extra 14 days above his current credit receivable turnover. Achha. This is of 5 marks. So we have to write increase in credit term, sales will be increased, customers will be attracted, profit will be increased, relationship with the customer will be increased, but delays in payment will affect your cash flows. Cash inflow आपका affected हो जाएगा, or there will be a chances of bad debts. Okay. Move. Okay. Now we have to calculate the trade payable turnover. How to calculate trade payable turnover? You know what is the formula of trade payable turnover? Trade payables divided by purchases. So trade payable turnover is equal to trade payable multiplied by 365 and divided by total purchases or credit purchases. Done. So here, if we take it, trade payables, how much is the amount of trade payables? Trade payables is 11,600. 11,600 multiplied by 365 divided by total purchases 109,000. 109,000. So what will the answer? The answer would be 11,600 multiplied by 365. 11,600 multiplied by 365 divided by 109,000. 38.8, almost 39 days. Almost 39 days. Okay, we round it off. 39. Done? Okay. Now, Jabir's credit suppliers are prepared to double the rate of his trade discount, provide the increase of his current monthly purchases by 20%. So, if he is going to increase purchases, the storage cost will definitely increase. Okay, but cost of goods is storage cost is increased. You need more money to pay off. But ultimately your cost of sales will decrease, and that could increase your gross profit. Are you getting my point now? So this is of 5 marks. Now next, on 31st July 2021, the following information was provided by KA Limited, a manufacturer of garden tools. Okay, inventory. This is a manufacturing. Prepare manufacturing account for Kia. Okay, so we are moving to manufacturing account. Okay, now the first heading is direct materials. Direct materials. First heading. Okay. Now, how to calculate direct materials? Opening entry of materials. How much is the amount of opening of inventory of materials? 35,000 34,200. 34,000. Raw materials, opening inventory. Oh, sorry, opening inventory is not 30. Sorry, I'm sorry. Yes, I'm sorry. Okay. क्या कर रहा हूँ? Especially is 5,820. Okay. Now purchases of opening in raw materials. Purchases of materials. Now purchases of raw materials. How much? 34,200. 34,200. Okay. Less closing inventory. Inventory. Closing inventory of raw materials is how much? 6,030. 6,030. Oh, I forgot to keep it. 6,030. I always keep the negative values in brackets, so I should not forget to deduct them. So this will give us the amount of direct materials. So amount of direct materials is how much? 5,820 plus 34,200 minus 6,030. The answer will be 33,990. 33,000. Have you forgotten something? Let's check. Forgot something. Carriage on purchases. Oh my god. Oh my god. It's my fault. Carriage on purchases. Carriage on purchases. How much? Sorry, it's my fault. I didn't see the carriage on purchases. 410. Okay. Now less closing inventory of material is how much? Bracket 6,030. Now, now we can put a line over here. Line, and we got no. Correct amount. Raw materials. How much? 5,820 plus 34,200 plus 410 minus 6,030. 34,400 is direct materials. 34,000. Yeah, 34,400 is the cost of direct materials. Okay. Now, second item, direct labor. For direct labor, it is given in the question direct wages cost. How much is the direct wages cost of direct labor? Now see direct wages 67,200. Okay, there is no adjustment for direct labor, I think. 67,200 is the amount of direct labor. Okay. Now see for direct expenses. Hopefully there is no direct expenses given. Okay. No direct expenses are given. So what we do, we add over here direct material, direct labor, and direct expenses and constitute the prime cost. But direct expense, no direct expenses given, so this is our prime cost. Prime cost. We have to add 34,400 plus 67,200. 101,600 is our prime cost. 101,600 is our prime cost. Okay, now heading production overhead. Production overheads. Now heading. So first production overhead would be, let's see the question. Obviously, first production overhead is indirect factory wages 24,000. Indirect factory wages. How much? 24,000. Okay. What else? Next is factory general overheads. Factory general overheads. Now, what about factory general overheads? We have to be careful because there are accrued general overhead also. So what we do, factory general overheads, 11th to 16,400. 16,400 plus accrued is given, that is 230. So total factory general overheads would be 16,630. 16,630. Is that so? Okay. Now, next item. Rates. Okay. Rates. How much is the amount of rates? Rates, there is an adjustment for rates. Rates were given is 5,300 minus there is a prepaid 500. That would sorry, that would make 5,000 minus 500, 4,800. But we don't take 4,800 only, but only 75% of it. Multiply by 75%. Okay. So 4,800 multiplied by 75%. The answer is 3,600 is your rates to be taken. Yes. 3,000. 3,600. Okay. After rates, what we have? Rates. Factory machinery depreciation. Depreciation of factory. Okay. So how to calculate? How to calculate? 20% per annum using reducing balance method. So factory machinery cost is 47,000. 47,000 minus provision for depreciation of factory machinery is 11,000 multiplied by 20%. So that would make how much? 47,000 minus 11,000 is equal to 36,000 multiplied by 20%. That is 7,200. Getting my point here? 7,200. 7,200. Now what we have to do? We have to calculate the total factory overhead. Total production overhead, POH, would be here. How much? 24,000 plus 16,630 plus 3,600 plus 7,200, 51,500, 430, 51,430. Okay, this is total production overhead. Now, prime cost plus production overhead, we call it TMC. What is TMC? Total manufacturing. Getting my point clear? 101,600. 101,600 plus 51,430. The answer would be 153,030. This is the amount of total manufacturing cost. Getting my point clear? 153,030. Okay. The last item, add work in process opening inventory. Okay. Then less work in process closing inventory. Getting my point? So opening inventory is how much? Work in process opening inventory is 1,750 and closing inventory is, keep it in the bracket so you should not forget to subtract. Okay, closing inventory is 2,780. 2,780. Okay. And now we get COP, cost of production. This is the end of our statement. COP, cost of production, is how much? 153,030 plus 1,750 minus 2,780. The answer is 152,000. 152,000. Got it? This is the end of statement. Okay? Manufacturing. Okay. Now they ask for income statement. Income statement of manufacturing account starts from, but income statement is for trading section. Trading section means you have to move till the gross profit. Bus. This is the end of statement. Trading part, income statement has two parts, trading part and profit and loss part. Trading part means you have to stop your statement at gross profit. Okay. Now see the amount of revenue. Revenue is 223,000. Revenue 223,000. Done. Now here we have to write heading. Cost of sales. Now, opening inventory of finished goods. Opening inventory of finished goods is given, very much given there. How much? Opening inventory of finished goods is 12,360. 12,360. Okay, now add COP. Cost of production we have to take from our previous statement. What is the amount of cost of production? 152,000. So here we have to write cost of production 152,000. Okay, add purchase of finished goods. It is given there 3,900. 3,900. Okay. Less here closing inventory of finished goods. So closing we have to deduct. So please keep it in a bracket. All negative figures should be taken in. Finished goods is 10,340. 10,340. So you should not add erroneously. Okay. The bracket will remind you that you are using a negative figure over here. We have to deduct. Now this is cost of sales. How much is the amount of cost of sales? Yeah, that would be again I forgot. Sorry, class. That's my mistake. Uh, add carriage. Sorry, class. I didn't see that. $80. Then we have to less. Less. Closing. Of, that's my fault. Okay. Closing inventory 10,000. Keep it in the bracket. 10,340. Okay. Now make a line. Here it is cost of sales. How much? We'll put it here and it should be in the bracket because we have to deduct it from revenue. So what if I forgot? Sorry, calculator. The calculator is here. 12,360 plus 152,000 plus 3,900 plus 80 minus 10,340. Cost of sales is 1,58,000. Getting my point clear? 1,58,000. 1,58,000. Should be the bracket because we have to deduct it from revenue. So here we will come to the last part, that is gross profit. Okay, it's the end of statement, income statement trading part is ending over here. Okay. So how much is the gross profit? 2,23,000 minus 1,65,000 is our gross profit. Getting my point clear? This is the end of statement. Okay. Getting my point clear? Yeah. Okay. Move to the last question. Question number 4. Achha. DH Limited, a customer of K Limited, has been declared bankrupt. A debt of 350 was owing to. This has to be recorded. Prepare generated record irregular narrative is not required. No narration. Okay. So what we have to do? What we have to debit? What we have to credit? Okay. We will debit here. Irrecoverable. Irrecoverable. That's is going to be debit. 350. And DH Limited. DH Limited is going to be. Okay. Suppose we are required to write the narration. So what we have to write in narration? Just for you. To record worthless account of DH Limited written off. Done. Suppose they ask you, here you are not required to write narrators, but suppose they ask you, please write narrators. This is the way we have to write narrative. Okay. Now explain how provision for